Welcome back, everyone, to the ninth annual Laurentian Bank Institutional Investor Conference. My name is Naman Sati. I'm the Diversified Industries Analyst here at Laurentian Bank. With me is Jordan Simon. He'll be helping me moderate this session. Before we start, just housekeeping items that I'll just repeat that please keep your microphone on mute. Your camera should be turned off during the presentation. Please ensure your name appears on the screen so we can properly address any questions that you have. We'll try to have a question answer session at the end, but please feel free to ask any questions in the chat session. Jordan will be monitoring those questions and will sort of ask them as they come. So please feel free to ask any questions. We want this to be as interactive as possible. For this session, we have with CargoJet with us, and we have the Chief Strategy Officer, Jamie Porteous, who's been really at the forefront of CargoJet, and he's been at the center stage of the growth that CargoJet has seen, and he has about 20 years of experience in the airline industry. Prior to CargoJet, he was with Air Canada, where he started his career. He was Director of Operations there, responsible for cargo movement control on a global basis. When Air Canada decided to sell its cargo aircraft fleet, Jamie moved to customer side of the business, spending 3 years as consultant director of rapidly growing transportation business. We also have with us Sanjeev, who is the interim chief financial officer at CargoJet. He's been with CargoJet for about 17 years and has seen firsthand a view of the exceptional growth that CargoJet has seen. So thanks, Jamie and Sanjeev, for taking out time and being with us to speak with our investor community. Welcome, and thanks once again.
Our pleasure, Naman. Thank you. Good morning, everybody.
So we'll start off with a sort of an overview question. You know, over the last 2 years, things have changed quite a bit for CargoJet. Demand for dedicated air cargo has picked up substantially. If you could share your perspective on parts of the industry that have permanently sort of changed after COVID, and one of them is obviously acceleration towards the online shopping trend. But what are the other trends that have sort of materially changed or permanently changed over the last 12, 18 months?
Sure, and thanks. I can give a brief update on our perspective on the growth opportunities for CargoJet and really the positive impacts on our business over the last several years. And really goes back to even pre-COVID being an issue globally, and particularly in our industry, where we've been in CargoJet's existed for just over 20 years now. Historically, we've been dominant in and built up a very dominant position in the domestic overnight air cargo industry here in Canada with over 90% market share. And we had embarked on a strategy several years ago that we wanted to not just lessen our dependence on the domestic business, but we really have 3 segments that drive our revenues: our domestic overnight business, our ACMI business, which is an acronym in our industry for where we provide the aircraft, the crew, the maintenance, and the insurance for a dedicated customer, and then pass through all the variable operating costs associated with that. And the third segment being our ad hoc charter and our international scheduled service. And we were already well on our way to, at one time, I think our domestic revenues represented over 80% of our overall business. And even leading up to pre-COVID, we were well on our way to growing both the ACMI segment and the international and ad hoc charter business. COVID certainly accelerated that in all 3 segments of the business. E-commerce was already a significant driving factor for our domestic business here in Canada. It was accelerated significantly over the last couple of years because of the impact of the COVID-19 pandemic and significantly more people shopping, obviously working from home and shopping from home, but also because Canada did then and continues to lag behind most of the rest of the industrial world in terms of its online e-commerce penetration as a percentage of overall retail sales. I think pre-COVID, we were hovering around 8 to 9% of overall retail sales were done online, as compared to significantly higher than that in the US and particularly in Europe and Asia, where it's up in the 20 and 30%. It significantly spiked, obviously, in 2020 and 2021. It's still relatively low as compared to runs around, I think, latest statistics would show it around 12 or 13% of online retail sales, significant increase from what it was a couple of years ago, but a significant growth opportunity. And if I look at our domestic business and some of our customers, namely Amazon being the big online retailer, have indicated to us that Canada is the fastest growing market in the world for them, primarily because of our low penetration rates. You look at the second, so and e-commerce is not just a Canadian phenomena. The growth of e-commerce, proportionally maybe higher here in Canada because of our low penetration rates, but it's also increased demand globally around the world, which has increased the demand for dedicated cargo services like CargoJet. That was equally or additionally compounded by the fact that the COVID-19 pandemic caused a dramatic reduction in the amount of passenger capacity and passenger travel, obviously, around the world. One interesting note that a lot of people don't understand or don't appreciate is that prior to the COVID-19 pandemic, more than 50% of the world's air cargo actually traveled in the belly of passenger aircraft, primarily wide-body passenger aircraft traveling or operating intercontinentally between North America and Europe, Europe and Asia, Asia and North America. With a dramatic decline in passenger traffic as a result of the COVID-19 pandemic, that eliminated a significant amount of cargo capacity. As I said, over 50% of the capacity wasn't all eliminated, but I'd say 90% of it was eliminated almost overnight. So it left an extreme void. You've got, at the same time that you have, increased demand because of the growth of e-commerce, you layer on top of that, obviously, significant increase in demand initially in the initial stages of the COVID-19 pandemic for the movement of PPE around the world, and a dramatic shortage of cargo capacity. It was very beneficial for companies like CargoJet that operate dedicated cargo aircraft, and we were able to pivot very quickly. We were able to re-engineer some of our flying domestically on our domestic overnight network to add capacity, to free up aircraft, to add to our ACMI business, primarily with DHL, who's our primary ACMI customer. And of significant note with DHL is they're a global integrator that compete on a global basis with integrators like UPS and FedEx, with one fundamental difference: UPS and FedEx both being American companies, and DHL being a subsidiary of Deutsche Post, a German company, but they're not a licensed airline. Unlike UPS and FedEx that operate large fleets of cargo aircraft, DHL has built up a global network through a combination of dedicated cargo operators like CargoJet and a significant historically reliance on buying belly capacity on passenger aircraft, particularly wide-body aircraft that were traveling internationally. So with that removed, they had to scramble and pivot very quickly and add capacity. CargoJet was able to free up some aircraft for them and continue to do so. And we've been able to grow our ACMI business significantly. And then the third aspect, our international scheduled service, we do on a limited basis, and particularly the ad hoc charters. We did a significant number of ad hoc charters in the initial days or months of the COVID-19 pandemic, primarily bringing PPE back from Asia into North America primarily for the Canadian and various provincial governments. That somewhat leveled off in 2020 and into 2021, but demand for ad hoc charters remains extremely strong. Pricing remains extremely strong, just because there's a significant lack of cargo capacity, continues to be a lack of cargo capacity globally to meet that demand. And that's really been accelerated in the latter part of Q4 of 2021 and certainly into 2022, again related to the COVID-19 pandemic, primarily because of the increased demand for rapid tests by the Canadian government and the US government. And we've done a significant number of charters out of Asia to accommodate that growth.
Okay, now that's wonderful color. And just going back to the point that you highlighted, where 50% of cargo would go into belly capacity, and some of that then sort of moved back to dedicated air cargo. So over the time when belly capacity comes back, just trying to get a sense how much of that business is going to stick with dedicated air cargo, because probably you guys can offer better services or something.
Yeah, good question. I think the belly cargo capacity that historically traveled, just general cargo that traveled in the belly of passenger aircraft intercontinentally, would continue we could revert back to the belly capacity on the lanes where there is capacity in the belly of the aircraft type that are operated in those areas. But the significant shift, it's really a structural shift in the business, is particularly with a company like DHL that was dependent on a significant number of cargo aircraft. They've made a strategic decision that they're not going to depend on belly cargo capacity. And subsequently, they've added, I know that in 2020 and 2021, I think they added over 40 dedicated cargo aircraft to their global fleet, including obviously some of CargoJet's aircraft. And their volumes grew by 30% because of the impact of the growth of e-commerce and just a global lack of dedicated cargo capacity around the world. I don't think you'll see a shift back to belly capacity of that type of business. And in fact, that's one of the reasons why, I'm sure you're going to ask us about our fleet plans going forward, but it's one of the reasons why, we did an equity offering in 2021 to raise some of the funds to fund the acquisition of several more dedicated cargo aircraft that are going to be converted and added to our fleet over the next several years, because we strongly believe, and our customers more so strongly believe, that there's going to be continued very, very strong demand for dedicated cargo aircraft and a lack of capacity, regardless of whether passenger capacity comes back or not.
Okay, no, that's good to hear. And just from cost perspective, there's been a lot of inflation pressures as well. I mean, with the oil prices now where they're heading, you have long-term contracts with its customer. So if you could just share that some of the costs, they are really passed through the customers, and how you sort of adjust that, and how it's you don't get impacted from it directly, right?
Yeah, I mean, the biggest inflationary cost in the last couple of years obviously has been fuel, but we're protected on fuel. We have a fuel component in the rates with all of our customers, and when there's increases in the cost of fuel, we pass that along as it occurs. There's a bit of a lag, probably on a monthly basis, but we recover any increase in cost of fuel, so we remain whole on that. Other inflationary costs, most of our major contract customers have rate escalation clauses included on the anniversary date of the agreement, typically tied to CPI or CPI plus a percentage, which covers, and I think historically the last 10 years it's probably around very low 2 to 3%. I think going forward into 2022, it's a little higher than that. It's probably going to be in the 4.5% range from what we've seen in the latest lagging 12-month period. So we're confident we recover those costs. Pilot fatigue has been a new cost that we incurred. Our pilot costs were a little higher than normal in 2021, related to a number of different factors. New pilot fatigue regulations that came into effect in early 2021 by Transport Canada that we've known about for the last couple of years. We're able to recover most of those increases. Not all of our customer contracts had specific language to recover that type of an increase. The ones that did, we've been able to implement a surcharge to recover that. The ones that don't, we fully expect to do that on the renewal of those agreements. And the other, we've been victims of our own success with the dramatic growth that we've seen in our amount of flying, particularly on an ACMI basis, and that growth of that business. We've had to add a lot of pilots in 2021, and the lead time between hiring a pilot and bringing them on payroll and them actually flying, he or she actually flying an aircraft, varies significantly depending on their qualifications and their experience levels. The majority, we bring them on and it may be several months before they're online flying. So we had a significant spike in costs as we onboarded those pilots in the spring and the summer of 2021 that'll sort of flatten out as we go through 2022 and add the new business to and those pilots start flying. The other increase was related to just the transportation costs for pilots, because all of our pilots are based in Canada. A lot of our growth has been, particularly with DHL, has been out of the US, so out of Cincinnati to Europe to back here to Canada, but also to Mexico. We transport the pilots, as most airlines do, deadhead pilots around the world using commercial lift, and with no commercial lift between a place like Toronto and Cincinnati, we were actually chartering corporate aircraft to do a shuttle to move pilots back and forth every day to ensure that we can maintain service with the customer. That spiked those costs up a bit in the summer, but as things have started to normalize and hopefully open up even more in 2022, we think we'll see those costs come back to normal.
That's fair. And just in terms of pilots, like hiring them and retaining them, it was something, it was an industry-wide challenge, I would say, prior to COVID, but there are still challenges. If I recall on last conference call, you mentioned that it's still a challenge in terms of hiring new pilots, training them and retaining them. So is there something that's being done to sort of mitigate that and to ensure that you always have the right sort of workforce there?
Yeah, well, several things that we've done now. I mean, you're right. I mean, pre-COVID, there was a global, I would call it an acute shortage of pilots globally. And we were concerned about being able to attract enough pilots to continue to meet the demands that we knew we were expecting to have from our cargo customers. COVID, dramatically switched that around, and all of a sudden there was an acute surplus of available qualified pilots around the world. We were able to obviously in the initial stages of 2020, when there was an abundance of availability of pilots, we purposely selected pilots that we thought, as an example, there's a lot of expat Canadian pilots that were flying for Asian carriers or Middle Eastern carriers that wanted to come back to Canada. Some that were very, very well qualified on the type of equipment, the 767s, namely that we operate, that we brought back and hired at CargoJet because we knew the advantage and the desire that they had to bring their families back, to repatriate themselves back to Canada. They're not likely to go back to their entry-level jobs in Asia and the Middle East. So we have a significant number of those. The number of laid-off passenger pilots that we've had in Canada, we knew that had recall rights with Air Canada. There's a number that we had that have already gone back, but we've purposely hired in advance of our requirements, and that's partially what drove up our pilot costs in 2021, was because we hired knowing that we would lose some to go back. We wanted to ensure that we had more than we needed, so that when we brought on new business, we wouldn't have any shortage and any inability that would impact service to our customers. So as much as the acute, we went from acute shortage to an acute surplus to, I would say there's nowhere, it's not nearly what it was pre-COVID. It's a little more difficult because you have pilots that may have worked for passenger airlines that are still laid off, that are hopeful that they're going to be recalled. So there's sometimes a reluctance for them to change companies, but we're confident that the initiatives that our flight ops folks have put in place will ensure that we have sufficient pilots to accommodate our growth over the next several years.
That's wonderful color. And just in terms of when you hire someone, in terms of the pilots, I'm assuming the aircraft is different, so there's a bit of training involved. So typically, how long does it take for you hiring a pilot and he eventually sort of operating an aircraft?
It really depends on the individual pilot. I would say as a general rule, it's probably 2 to 3 months. It could be quicker if the pilot has a significant amount, especially if it's a captain that we hire as what we call a direct entry captain, who has a significant amount of experience and hours on the actual type of aircraft that we operate, namely the 767-300, then it's much quicker than that.
Okay, that's good to know. And just changing gears a bit here, CargoJet is adding new capacity, like you just highlighted. Some of that is really to absorb the heightened demand over the last 12 to 18 months. But can you share for our audience what sort of demand are you experiencing? Especially, I think you've already mentioned it, the ACMI international side of the business. Where are you looking at to deploy these new aircrafts that you're going to see?
I would say the majority of the new aircraft that we're bringing, first of all, you have to appreciate a couple of things. We've had some accelerated growth over the last couple of years that we've been able to bring on, and we've taken somewhat of an operational risk to bring on that business, because typically, an airline like ourselves would have a number of aircraft that in our business, primarily the domestic overnight business. So you would have a number of aircraft that are dedicated to fly just the domestic business every night. The ACMI business are exclusive aircraft that are dedicated to fly for an ACMI customer like DHL on a designated route. And then you need to have a number of spare aircraft to be able to support those routes, whether it's an operational spare to be able to ensure that you have the level of reliability, because obviously planes break unexpectedly sometimes, regardless of how much you maintain them. We need to ensure that we have adequate backup aircraft to maintain that level of reliability. You also need a number of what we call maintenance spares, because each aircraft, regardless of what type of flying that it does, is mandated from a safety standpoint from Transport Canada to undergo what we call a heavy maintenance or a C-check a certain number of hours, either calendar driven or either hourly driven or calendar driven. In our case, it's calendar driven because of the low utilization of the aircraft. Every 24 months, we take an aircraft out of service for a month to do a full check and right down to checking the infrastructure of the aircraft to ensure that it continues to operate safely. We take the risk sometimes to take on new business by operating less operational spare aircraft to take on the new revenue and hope that our aircraft will maintain. So some of the new aircraft deliveries will go to replace those, and we'll probably repeat the cycle, take the risk again. But we have significant demand over the next several years, again, because of the global shortage of air cargo capacity. One of the things that we saw and we think we were very It was opportunistic, but we think we understand the industry well enough that one of the reasons why we went out and did an equity offering in 2021 when our share price was at an all-time high was to raise the funds to acquire the aircraft that we know we're going to need over the next several years without increasing our debt levels. And more importantly, though, availability of aircraft, similar to pilots, you can't go out. There's not a used aircraft lot down at the corner that you can go and pick up an aircraft and start flying next weekend. It's a long lead time, and the biggest lead time is the actual conversion of the aircraft. And there's plenty of aircraft in our business. Typically, it's a retired passenger aircraft that we convert into cargo, into freighter configuration. It's a 6-month process just to have the freighter converted, but there's a limited amount of capacity to do those conversions because there's only 2 or 3 companies in the world that do it. Our primary supplier of conversion capabilities, a company called Israeli Aircraft Industries in Tel Aviv, or IAI. They have a limited amount of capacity available to convert every year. They're only converting probably their lines at full capacity, probably are able to convert, I think, 20 to 24 aircraft per year. We wanted to ensure that we locked up not only the feedstock, we wanted to purchase the feedstock to convert, we wanted to lock up those slots because we knew that they would be filled very soon. And a good example is today, you couldn't get a slot at a conversion facility to convert a cargo aircraft until 2025. So if you were a startup airline today and you wanted to go out, you had an aircraft and you wanted to convert it, you're not getting it converted for 3 years and not into service for 3.5, unless you bartered and bought a slot from us or somebody else, which happens from time to time.
Okay, no, that's great. And I think investors probably have this this question as well, that in 2023, you're adding 4 777s, then a couple more in 2024. Some of the belly capacity would come back. Probably it won't be of the same magnitude as before. So there is this element of risk that you also highlighted that you take in terms of when you build that capacity and then you add some contracting aircrafts. I'm just wondering, how do you think about if those contracts get delayed? Do you have sort of some sort of ways to mitigate those costs? Can you park it somewhere else, or can you lease it again, or how does that work?
Yeah, I mean, at the extreme end, we have some flexibility in terms of options on aircraft and whether we take them or we don't take them, but we don't consider those as even anything in our viewpoint that we're even considering. The demand for cargo aircraft is so great right now and will be for the next several years that honestly the biggest dilemma that CargoJet has, it's a great problem to have, is as these aircraft are delivered, who do we operate those aircraft to? Who do we put them into contract with? Because the demand greatly exceeds the number of aircraft that we're going to be bringing in. So how do we satisfy all of the customers when we know right now at this point in time we don't have enough aircraft coming into our fleet in the next year or two to meet all of that demand? So how do we continue to satisfy and balance that? We give customer A an aircraft now, customer B an aircraft in 3 months, and then customer A an aircraft in several months. So we're very confident that we'll put those aircraft into long-term contracts as they are delivered. We acknowledge that, as compared to our historical sort of experience that we've had in the last 10 years, but particularly 7-8 years ago in 2015, we added a significant number of aircraft to our fleet, but that was directly related to the successful acquisition of a new contract, in that case with Canada Post and Purolator. So we're able to equate the purchase and the acquisition of these aircraft with the new business that was going to be coming in. I get that we haven't been as open right now with that, but we're very confident that as these aircraft come into service, we'll be announcing contracts associated with those.
Okay, oh, that's good color. And so this growth is coming primarily from ACMI or dedicated aircraft that you could put in. And what's happening on the overnight business in terms of growth? Are there opportunities to add an aircraft, or is it you guys still have good capacity there to service everything that's out there?
No, we continue to see very strong growth on our domestic business. It's a little bit different than it historically has been, namely because of the impact of Amazon to the domestic business in Canada, where up until the summer of 2021, Amazon was a customer of continues to be a customer of ours, but they were exclusive customer of ours on what we call a BSA basis or a block space arrangement, where they were buying capacity on our domestic network. Their growth, again, accelerated because of the impact of COVID-19 and particularly the impact that's had on the accelerated growth of e-commerce here in Canada. They added 2 dedicated aircraft to the Canadian market in the summer of 2021 that we operate for them on what we call a CMI basis, because they own the aircraft, they had them converted, and they give them to us to operate on our operating certificate, and we operate those exclusively for them. So that caused a little bit of dilution because some business moved, particularly on the lanes. We only operate those aircraft between major markets, between Hamilton and Alberta and British Columbia. Amazon continues to use our overnight network for all the other 14 or 15 locations that we operate to in Canada. But they've dramatically, they've filled those aircraft in very short order. And we started only operating those 2 767s in July and August, respectively. They operate 7 days a week. And by October, they were asking us to add a 3rd aircraft on a charter basis for peak season. We added another 767-300 of our own, one of the aircraft that operates overnight on our overnight network. We operated during the daytime 7 days a week from early November till the end, to the middle of 3rd week of January, just to supplement that the continued demand and growth of their domestic business. And so going forward in 2021, I fully see those demands continuing. I would fully expect that there will be a point, likely in 2022, that a 3rd aircraft gets added in Canada for Amazon. It would likely be on an ACMI basis, because I know in discussing with them, they feel exactly the same pressures that we have. There's just not enough cargo aircraft to go around. Any of the aircraft that they've bought that they're currently converting are slated for their domestic to add capacity to the domestic US network because of the growth that they're seeing there. And equally, as aircraft come in, we may need more capacity on our, is one of the reasons why we're adding some 757s in 2022, is because we feel we may be able to better utilize those to enhance service levels and add capacity to our domestic network, and potentially free up a 767, which is a more desirable aircraft for an ACMI customer like Amazon or DHL or others.
Yeah, that's right. And within this overnight or domestic business, I know it's hard for you to see what's in the boxes, but in terms of B2C and B2B, is B2C sort of coming back, or it sort of cannibalizes one another, or how does that work?
I don't think B2B is, you're right, it's a very good question, Elman. We don't have direct visibility to what percentage of our business is B2B or B2C, other than feedback from our customers. And if I look at some of our larger customers like Purelator and Canada Post that are in both sectors, they don't differentiate when they give us a box or they give us a container full of packages what's B2C and what's B2B. But I would speculate to say that pre-COVID, our overnight business, probably 30 to 35% of it was represented by B2C, and the balance of it was B2B, where at one time it was 100% B2B. I think you've seen a significant growth in that in the last couple of years, and I think we'd be approaching, if not in excess of 50% of our overnight business is represented by the B2C sector, and a lessening dependence on the B2B. And I in talking with our customers, you can appreciate that they're not seeing the same level as demand that they saw pre-COVID, because in the B2B sector, and they're focusing most of their attention on growing the B2C.
Okay, that's fair. And I just wanted to check with Jordan if there are any questions from the audience.
Not at the moment.
Okay, that's good. And just in terms of, you've mentioned you did an equity raise last year. In terms of this growth expansion, do you think you would require some additional capacity, and or is it for now you're pretty comfortable where you are in terms of your debt levels as well?
I think I'll let Sanjeev add a couple of comments, but I think from a high level, I think one thing that we're very proud of over the last few years, and again, it was part of our strategy, even pre-COVID, was to focus on using available excess cash flows to pay down debt. I think we've done a very good job of improving our balance sheet and improving our leverage over the last couple of years. We have a significant amount of capacity available in terms of funding aircraft from cash flow, which I think is significant. We may do some other investment opportunities, but I'll let Sanjeev maybe comment on.
Yeah, till today we were using basically our equity funds to basically finance our aircraft. We still have a good cash from operations, we are generating nearly about 20 to 22% of free cash flow, which we can invest in our growth capex. At present level, we expect that this to basically finance along with our credit line, which is of 600 million and available to us. We have it's all not used as such, but considering that we will be doing a major expansion in coming years, we might look into other alternatives as well. Maybe do a sort of a term loan or a debenture issue or something like that, but that has not been finalized as yet, right? So nothing is there. At present, we are totally focused on our line as well as on cash from our operations.
Okay, that's right. And I remember last year when you had a lot of demand in terms of you had to operate a lot of aircraft, so you had taken exemption for some of those maintenance. So is that something which is normalized now, or should we expect a little bit of hike in maintenance capex in the coming year?
Maintenance cost is that was done for roughly 6 to 9 aircraft from our facility. But what that deferment had done is that had moved our entire maintenance program forward. So it's not that there will be overlap of costs. It is just like the costs have moved forward. So we will not see a big chunk of cost coming in one period. It will all be normalized, sorry, from now onwards.
Okay, no, that's fair. And just changing a little bit here, I think most of the investors probably know this, that during pandemic, you had done these chartered flights to China, Turkey for PPE procurement. If you could just speak, Jamie, about the agility or the flexibility of how you adapted to that situation, because I think it's reflected in your results itself, but I assume on the operation side, there was quite a bit of things that had gone in the background.
Yeah, I know we were we were able to very quickly in the early part of the pandemic in March, April, May of 2020. Two things happened that required didn't require, but we had two significant demands. One was from companies like DHL to add aircraft on an ACMI basis, and from various provincial and particularly the federal government for additional capacity to bring PPE back into Canada. We were able, as you suggested, we were able, in conjunction with Transport and agreement with Transport Canada, we deferred some heavy maintenance that was planned in 2020 that freed up a couple of aircraft that was able to operate the PPE charters for the Canadian government. We were also able to free up some aircraft from our operational spares to take on initially short-term contracts for DHL to take over some of the capacity that they required. That eventually turned into longer-term agreements. The PPE, obviously, charters, we did those throughout mainly in the second quarter of 2020, and then they ended, as Sanjeev said, we had deferred some maintenance, but we've caught up with everything and we're back to our normal cycle of maintenance right now. There has been right through 2021, and we were often reminding investors and analysts that we didn't expect that we would continue to repeat the especially ad hoc charter revenue that we experienced in Q2 of 2020 and 2021, and we didn't. And I think we indicated that normal run rate for us in terms of ad hoc charter in a quarter would be in the $10 to $15 million range. I think we're at or above that level, certainly for the last couple of quarters of 2021. Going forward into 22, and really the demand for ad hoc charters for us, either with the exception of deferring some heavy maintenance and dedicating some aircraft, is really utilizing the aircraft that we have in our fleet during downtimes on weekends or during the day, or when we have extra aircraft when we're not doing heavy maintenance. Certainly the demand in 2022 and at the end of 2021 is extremely strong, and now, and also related to COVID, mainly driven by the significant demand for rapid tests to be brought by the Canadian government to bring into Canada, and the US, to a lesser degree, the US government. But we've been flying some charters out of China using existing aircraft during downtimes. In the early part of January, we took delivery, recently took delivery of one of our new aircraft that was delayed from October of last year. It's not going into a revenue service flight until early April, so we have another month and a half of probably daily flights that we'll do out of China. So it's going to be extremely long extremely strong ad hoc charter demand for at least the first quarter of 2022.
Okay, that's good. So essentially, you have a good demand. You seem very confident that whatever capacity expansion that you're doing, you'll be able to park that through contracts. Your cost side, the biggest one, the oil one, you can sort of pass that on to the customers. But what would you think is the biggest challenge that you see in this business?
I think obviously the biggest challenge for us is getting aircraft quickly enough and being able to add them to our fleet as fast as the customer's demand requires them. And at this point, there's a definite lag, and it's being somewhat even further compounded by as every other industry, the impact of slowdowns in supply chains, the impact of COVID restrictions in workplace and workforces has slowed the conversion of aircraft. So as I indicated, 767-300 that we were expecting to get last October, we only took delivery of this week. Or last week. It'll be on our operating certificate and start operating next week on some of the charters that I mentioned. But that's really the biggest challenge. And as we look forward into 2022 and 2023, we have some fairly aggressive aircraft delivery schedules. The concern we have is based on the recent experience, we'll probably see some delays in the conversion and then the introduction and delivery of those aircraft. That's really the biggest risk to us right now.
Okay, that's great. I think we're coming close to the end. So I'll just ask one last one. So CargoJet has this natural monopoly within the domestic overnight business. The size of the market really needs one player to be profitable, but e-commerce is seeing a lot of growth. So how do you see the risk of a new major player entering the market? Can it impact your business in the long term?
We're not concerned about the risk of competition on our domestic. When we look at our domestic business, I think we've built. The fact that we have, enjoy over 90% market share, the structure and the term of the contracts we have with all of our major customers with multiple years remaining on most of the major agreements and with renewal options by mutual agreement in most of those. The fact that we've demonstrated for over 20 years that we can operate our domestic network to 16 cities across Canada, which all of our customers require service. We fly 80-something flight legs every night, connecting between those cities, which all of our customers require, and we do that with a high degree of reliability and on-time performance, which is probably our customers' number one criteria. Unless we fail to deliver, fail to start performing as we've demonstrated for the last 20 years, that would really be the only reason for any of our customers to look for an alternative. And the fact that there is no, even though there are, Air Canada's converting aircraft, WestJet's converting aircraft, neither of them have any. I don't think any of them have indicated any interest in operating in the domestic and competing on that level, but neither of them have any track record of on-time performance or reliability. So the fact that any of our customers risking their business with really somebody that's a new entrant into the business is highly unlikely, if not impossible, in our opinion.
Okay, no, I think that's a great color that you've added there. So we're coming close to the end of our time. I really want to thank you both, Sanjeev and Jamie. I really appreciate you taking the time out and speaking with us and the investor community. Once again, thank you for giving your time and sharing your thoughts about CargoJet and its growth opportunity. I mean, it's been growing a lot, and I think there is still some opportunity like you highlighted there. So thanks for that.
Thank you.
Our pleasure. Thanks, everybody. Thanks, Norman.
Thank you.
Thank you.
Bye.
And just for our audience, our next session would start at 12:25. That would be with Exchange Income Corporation. It's going to be at 12:25. Mike Pyle, who's the CEO of Exchange Income Corporation, he's going to be with us. That's going to be an interesting chat as well. So stick around, and I will see you at 12:25. Thank you.